From World War II to 1971, when gold ruled the global economy, throughout human history, only a few things have defined power, wealth, and authority for centuries. Gold stands at the top of that list. But the journey of gold prices after World War II is not merely the story of metal. It is a story of global power systems, economies, wars, crises, and human fear. In the 1940s, while the world was burning in the flames of World War II, gold prices were not determined by the free market. Governments controlled them. The United States had officially fixed gold at $35 per ounce in 1934, and that price remained stable for decades. After the war ended, a historic agreement in 1944 reshaped the global financial system, the Bretton Woods system. Under this system, the U.S. dollar was directly linked to gold. 1 ounce of gold equaled $35. A new era had begun. Most major world currencies were tied to the U.S. dollar, and the dollar itself was tied to gold. In reality, gold remained the foundation of the global economy. During this period, gold was not just jewelry or an investment. It was a measure of global power. Around 1945, gold traded near $37 per ounce. What is remarkable is that from 1945 to 1971, roughly 25 years, the price barely changed. Why? Because markets were not setting the price. Governments were. The United States emerged from World War II as the most powerful country in the world, holding the largest share of global gold reserves. Europe was devastated. Japan was destroyed, and the Soviet Union was rebuilding. America became the center of the global financial system. But every system carries a flaw. By the 1960s, the United States was spending heavily on the Vietnam War, Cold War military expansion, and global commitments. Dollars were being printed rapidly, but gold reserves were not growing at the same pace. Other countries began to doubt whether the U.S. actually had enough gold to back the dollars in circulation. France openly started demanding gold in exchange for dollars. A global monetary crisis was brewing. Then, in 1971, a historic event changed everything. U.S. President Richard Nixon announced that the dollar would no longer be convertible into gold. This became known as the Nixon shock. It was the moment the world abandoned the gold standard and entered the modern fiat currency era. And it was also the moment gold prices were finally allowed to float freely. The 1970s, the first gold explosion. After 1971, gold prices surged dramatically. In 1970, gold was about $35 per ounce. By 1980, it reached around $850 per ounce. That was roughly a 2,400% increase in just a decade. Why did this happen? The reasons were clear. Declining confidence in the U.S. dollar, rapid inflation, oil crises, Cold War tensions, the Iranian Revolution, investor fear. One principle has remained true throughout human history. When people lose trust in governments, they buy gold. However, the 1980 peak did not last long. The United States raised interest rates sharply, inflation came under control, and gold prices began falling. The next 20 years were difficult for gold. By 1999, prices dropped to around $250 to $300 per ounce, nearly a 70% decline. But history was far from over. 2000, a new era begins. After 2000, gold entered another long bull market. In 2001, gold was around $270 per ounce. By 2011, it reached nearly $1,900 per ounce. Why? Several global shocks. The 9/11 attacks, wars in Afghanistan and Iraq, rising global debt, the 2008 financial crisis, massive money printing by central banks. The 2008 crisis shook the world. Banks were collapsing. People feared the entire financial system might fail. Gold once again became the ultimate safe haven. 2011 to 2015, another decline. After the 2011 peak, gold fell to around $1,050 by 2015. This happened because the U.S. economy recovered, stock markets surged, investor confidence returned. But this calm was temporary. It was a calm before another storm. Summary of Part 1, 1945 to 2015. A quick historical snapshot. 1945, $1.37. 1980, $8.50. 2000, $2.70. 2011, $1.900. 2015, $1.050. This journey was not just about price. It was about shifting global power structures. 2016 to 2026, a new golden era, global fear, and the future. After 2015, the global economy appeared stable. Stock markets were rising. Technology companies were booming, and many believed another major crisis was unlikely. But history teaches us. Periods of calm often precede storms. In 2016, gold traded between roughly $1,060 and $1,250 per ounce. Investors assumed the golden era might be over. Then global politics began shifting. U.S. political changes, China's rising economic power, European instability, and rapidly growing global debt were quietly strengthening gold's foundation. By 2018, prices hovered around $1,200 to $1,300. Then came 2020, and the world changed. 2020, COVID-19, and the gold explosion. Few events in human history have affected the entire planet simultaneously. COVID-19 was one of them. Economies shut down. Businesses stopped. Airplanes were grounded. Fear spread globally. Central banks responded by printing unprecedented amounts of money. Trillions of dollars entered the financial system. When money supply increases rapidly, currency value declines. And when currency weakens, people buy gold. In 2020, gold crossed $2,000 per ounce for the first time in history. This was not just a price increase. It was a crisis of confidence. The world realized the financial system was built largely on paper promises. 2021, temporary stability. With vaccines and economic reopening, optimism returned in 2021. Gold slipped slightly, trading between $1,700 and $1,900. But deeper structural problems remained unresolved. 2022, Russia-Ukraine war, and a new reality for gold. In February 2022, Russia invaded Ukraine. This was more than a regional conflict. It shocked the global financial system. Western nations imposed severe sanctions, even freezing Russian central bank reserves. Many countries realized something alarming. If political disagreements occur, your dollar reserves may not be safe. This moment was historic for gold. Central banks accelerated gold purchases dramatically. In 2022 and 2023, central bank gold buying reached record levels. Why? Because gold is politically neutral. It cannot be frozen by foreign governments. 2023 to 2024, breaking historical records. In 2023, gold returned near $2,000. By 2024, it surpassed $2,100, $2,200, $2,300 per ounce. This surge was driven not only by investors, but also by central bank demand, inflation, global debt, geopolitical tensions, reduced trust in the dollar. Multiple forces were aligning simultaneously. 2025 to 2026, a new historical era. By 2025 to 2026, gold reached approximately $2,400 to $2,600 per ounce with market fluctuations. Comparing to the post-World War II level of about $35 per ounce, the increase is extraordinary. $35, $2,500. That is over a 7,000% increase. But the real story is purchasing power. Even after inflation adjustments, gold has preserved long-term value better than most currencies. Major historical gold declines. Gold does not rise continuously. History includes severe corrections. 1980, $850. 1999, $250 is almost equal to 70% drop. 2011, $1,900. 2015, $1,050 is almost equal to 45% drop. Gold is strong long-term, volatile short-term. The core truth, why gold rises. The biggest secret. Gold itself does not become expensive. Currencies become weaker. When governments print money, accumulate debt, or crises emerge, gold rises. Gold is essentially a measure of global fear. 2026, the world at a crossroads. Today, the world faces major challenges. Record global debt, U.S. China tensions, war risks, digital currency transitions, challenges to dollar dominance, energy instability, supply chain disruptions. Central banks are buying gold aggressively, a historically important signal. Whenever governments accumulate gold rapidly, major economic shifts often follow. Full timeline: World War II to 2026. 1945, $35.37. 1971, $35. Gold standard ends. 1980, $850. 1999, $250. 2011, $1,900. 2015, $1,050. 2020, $2,000. 2024, $2,300. 2026, $2,400 to $2,600. This is one of the greatest financial journeys in human history. The future. Will gold rise further? Experts disagree, but several realities are clear. Global debt continues rising. Money printing continues. Geopolitical tensions are increasing. Central banks are buying gold. Historically, these conditions favor gold. Some analysts predict $3,000, $5,000, even higher levels. Final truth: gold is not just metal. Gold represents trust, fear, power, history, human survival psychology. Civilizations change. Gold remains. If we study history carefully, a fascinating pattern appears. Before every major global war or financial crisis, gold prices begin rising. And today, central banks are buying gold at the fastest pace in history. The real question is not, why is gold rising? The real question is, what is the world afraid of?